Hi everyone and welcome to episode 16 of Coffee with Cheese. I'm your host, Narciso Bomben. Hope you're doing well. For today's episode, I wanted to revisit a topic that I've discussed in the past. And quite frankly, in my industry, in the industry of financial planning and financial services, you're going to find that there's a lot of core topics, and I'll tend to discuss them also in the upcoming episodes. So the topic for this week is insurance and risk management. So really making sure you protect your financial well-being and you protect your plan. But rather than do a deep dive into the different types of insurance and explain them, I'll do a quick overview of what I'm referring to, but I really wanted to spend some time talking about how do you impact change? What's maybe a more productive way of engaging in the conversation, or some tactical areas to start thinking about it so that way you're properly protected. So when I say insurance, I'm referring to three key life insurance types of strategies. One is life insurance, critical illness insurance, and disability insurance, right? So with life insurance, if there's a premature death, you're really leaving money behind for loved ones, whether it's in the form of paying off a mortgage, kids' education, replacing an income stream as an example. Critical illness, we're talking about someone survives one of many different types of critical illness diagnosis for more than 30 days, and they're given a lump sum, right? So this is, heart attack, cancer, stroke are the three main ones. And then disability is really protecting your income stream, right? In the event that you cannot work and you need to continue funding living and lifestyle expenses for a longer period of time, right? So again, those are the three types of insurance that I'm focused on when it comes to financial well-being and risk management. So what have I learned recently and on an ongoing basis around why the conversation may not happen as much as it should? Let's face it, it's not a fun conversation. You're talking about something happening to you that isn't very nice, especially as it relates to a premature death, but it's something that's very important. It's also something where you pay for, but you're hoping to never really use, if you know what I mean by that. It's not unlike conversations around home insurance and auto insurance, right? So it's not a fun topic. However, if you look at it through the lens of your financial plan, and this is where I've had some success. And when I say success, it's not about selling insurance policies. It's getting clients to understand and make a conscious decision that makes sense for them. So during the planning process, what typically happens is we start off, and this might be just, let's say, updating a current financial plan, looking at what the net worth has done over the last year, what is the current cash flow situation. But then we also get into goals. How are the core goals of retirement and kids' education tracking? So quickly then I transition the conversation into protection. What if something happens that you're not expecting? What will it do to the plan? How will that make you feel, right? And then we go through the exercise of not me telling them what insurance or the amount, but by understanding what they want to have happen. So for example, do you want to have your mortgage paid off and any other debts? Do you want to leave income replacement to a spouse, a partner? Do you want to have a lump sum just to pay off the kids' education in advance in terms of having already pre-saved it, right? Those are your choices, not mine. But once I understand the answers to those questions, then we can come up with the right solution, and you can make that decision to either self-insure or transfer that risk to an insurance company, okay? So I find that strategically, that is the best way to have the conversation to really get connected to what role insurance plays for you in your financial well-being. Now, some things to think about if it's outside of those circumstances. Two key places to look are mortgage insurance and any group insurance plans. So first off, starting with mortgage insurance, typically through a financial institution like a bank. You've got to watch here. It's not that it's bad, it just might not be right for you, right? The fact that you have some sort of insurance is a great start, but it's really in place to protect the lender's best interest, because what happens is as the mortgage balance declines, you're only covered against that declining balance. It's not a fixed amount, right? There's also something called after claim underwriting, so underwriting after the fact. And what happens if you don't qualify for whatever reason, albeit however rare it might be, the fact of the matter is it's all done after the fact. So again, this might not be the right solution for you and your family. So you should really think twice about it. And typically, in my experience, it's just covering the mortgage. What about, again, kids' education, other responsibilities, income replacement? If those things are important to you, you're not going to be properly covered through mortgage insurance, okay? The other area I mentioned is group insurance. So most employers these days offer a form of group benefits. Part of that is insurance. Life insurance, whether it's 1, 2, 3 times salary. Disability, usually it's included, but it's a smaller amount than might be right for you. And in critical illness, I see it as an option, but I usually don't see it as a standard or a default, right? So my point is there's plans in place, but are they right for you? Does it provide you the entire coverage, right? If you leave that employer, you got to think about what that means to you as well. So those two areas are tactical areas: mortgage insurance, group insurance plans, around really understanding if it's the right solution for you. Now, a concept or a psychological way of thinking about paying for insurance premiums. What if I told you there was a creative way of having the government pay an insurance premium for your set of premiums for you? And it has a double benefit of both saving for retirement and then taking that refund money to pay for your premiums, right? It's a good way to think about how to do it, and I'm not necessarily paying more of my cash flow into these premiums. And there's nothing wrong with that. Again, it's an investment. I want you to think about insurance as an investment in your financial well-being, not a cost or an expense, okay? So hopefully some of these ideas, concepts, little nuggets have you a little bit more motivated. If you want to talk to me more about insurance or anything to do with your financial well-being, I always welcome you to reach out for a one-on-one virtual coffee. And certainly if you feel like sharing this, commenting, please do that on various social media channels wherever you're seeing this. Again, thanks for watching and have yourself a great day.